What's going on, family? Today's video, I want to go in depth in an article from Redfin where it talks about 10 or 12 predictions going into 2023 that they see for the housing market. I want to talk about every one of those predictions and give you my thoughts regarding this housing market that has been just about everywhere, and everybody and their mother has an opinion whether it's going to go up or down. Now, this is just the first video that I'm going to do regarding real estate predictions and what everybody is saying is going to happen and what I believe is going to happen based on the data and we're seeing presently right now in the market. Let's get into it. Now, as you see, this article is from December 6th, 2022, and it says housing market predictions for 2023. Post-pandemic sales slump will push home prices down for the first time in a decade. Right off the bat, I definitely agree with that first part, post-pandemic sales slump. Now, regarding the rest of it, we'll have to jump into the article and see. Now, jumping right in, the first prediction is home sales will fall to the lowest level since 2011 with slow recovery in the second half of the year. Now, I've been saying this since about summertime that we are going to go through a housing market crash, a crash in transactions. I said transactions were going to slow up drastically. And many people thought I was just being silly and brushed me off. But please go check out this video right here where I went in depth talking about transactions slowing down to a halt. And that's basically what has happened. And I foresee that happening going into 2023, depending on mortgage interest rates, which they touched on in the first line of this article. Redfin goes on to say they expect 16% fewer existing home sales in 2023 than 2022, landing at about 4.3 million. Now, if we look at pre-pandemic numbers, 4.3 puts us right around the same number as 2009, 2010 regarding home sales, existing home sales, not new construction. So that does set us back a little bit. It's about 1 million homes less than in 2019 when we sold about 5.3 million homes. So regarding their first prediction, I think they are accurate. Home sales will take a huge dive, and I see transactions being anywhere from 4 million to 4.5 million. It all depends on mortgage interest rates because interest rates are the key to just about everything. If the interest rates are still high, homeowners presently owning their home are not going to want to sell and buy a new one, and that takes two transactions off the table because they're not buying a new home and they're not selling their existing home. Now let's look at prediction number 2. Prediction number 2 is mortgage rates will decline, ending the year below 6%. Now I know that may be hard to imagine after seeing rates in the mid 7s around the fall of this year, but rates have been trending down the past 3 weeks, and I can see rates hovering right around 6%. So yes, I see rates declining going into 2023. I think mortgage interest rates will heavily depend on how long and how severe this U.S. recession is. Redfin expects that the 30-year fixed mortgage rate to gradually decline to around 5.8% by the end of the year. And yes, I said I can see that. I can see them hovering right around 5.75. Now let's move on to prediction number 3 from Redfin, is that home prices will post their first year-over-year decline in a decade, but the U.S. will avoid a wave of foreclosures. And the second part, I 100% agree with. We will avoid a wave of foreclosures because too many people have too much equity in their property. Yes, there are a percentage of buyers that bought in the first half or first quarter of 2022, and they bought at elevated pricing. 270,000 homeowners are currently underwater because they bought in the first half of 2022 and did not put enough down, so they have negative equity in their property. But 270,000 people is a very small number of homeowners in this country. And foreclosures really is dependent on our economy and if people have jobs. Yes, our economy has been booming. We're posting excellent job numbers. And I believe there's 1.6 jobs for every person looking for a job right now. So I know people that have been laid off recently, unfortunately, but they were able to find other gainful employment. No, they might not have been making, this is a hypothetical, I'm not going to give their exact numbers. They were making around $200,000 to begin with, The job they just picked back up, they're not making 200,000, but they are making right around 175. So are they making the same amount? No. But are they in risk of foreclosure or not being able to afford their bills and lifestyle? That's not the case either. And there are jobs out there for qualified individuals. And also, when we look at foreclosures, we have to take into account the timeline of foreclosures. I jokingly talked about this in the live stream earlier this week, but the foreclosure process can take anywhere from a year to 3 years. So just because you may have missed a payment or are late and the bank may have filed a notice of default, it's not like they can come in 30 days or 60 days after you miss a payment like a landlord can and foreclose on your property. No, there are steps and procedures for foreclosure. So even if there is a mass amount of layoffs and unemployment just skyrockets in 2023, I still don't see a wave of foreclosures because those people will see that it is just better and more prudent to stay in their home even though they're not making a payment. And if they do stay in it, they can drag out the foreclosure process for a year to 3, depending on where you are in the country. Now let's talk about home prices posting their first year-over-year decline in a decade. Redfin expects the median U.S. home sales price to drop roughly 4% in 2023. Now, that is not entirely out of the question. Do I see that happening? No, not on a national scale. Certain locations in the country will see even worse price drops than this. Man, some locations have already seen worse price drops than this. But on a national level, I don't think we will see this big of a drop, but I'm not saying it's not possible. As a whole, I think we will be give or take 2% negative or 2% positive year on year. Now look at me when I say this. Real estate is hyper local. Depending on where you are in the country, that's all you need to focus on. Yes, it's nice to hear these national numbers, but if you're looking to buy a home in Austin, Texas, you don't really care about what the nation is doing. You need to be focused on what's happening in Austin, not only Austin, what's happening in that zip code that you're looking in, and what's happening in that specific neighborhood. Because I believe, not even believe, I've seen it. I'm a real estate agent and a real estate investor here in the Carolinas. Certain areas of a zip code could be having a quote unquote housing crash, while literally around the corner in the same zip code, you have areas booming, selling for above list price right now. So real estate is very hyper local. Do not get jaded and think that the housing market is just going to crash as a whole. You need to do your homework and search your specific location that you're wanting to buy and see what that market is doing. Prediction number 4 from Redfin says that the Midwest and Northeast will hold up the best overall. Now, I can kind of see that happening, especially the Midwest. The majority of the Midwest is pretty affordable still. Now, while you do not have the same incomes that you do on the coast, the cost of living is less as well. In the article, it goes on to list the U.S. housing market is likely to hold up best in 2023. And you have Chicago, Illinois, Milwaukee. You have 2 upstate New York cities, Albany, New York, and Rochester, New York. I'm from Rochester, New York originally. That actually makes me smile seeing Rochester on the list. Rochester is also one of the most affordable places to own a home right here in our country. So if you're looking for affordable homes, look no further than upstate New York. Certain parts of upstate New York, not right outside the city. Prediction number 5 from Redfin says rents will fall and many Gen Zers and young millennials will continue renting indefinitely. Now, I don't know how you feel about this. I do not know how you feel about this, but I believe they took an unnecessary shot at Gen Zers and millennials right now, young millennials. They didn't have to say that. But to their point, yes, I believe rents will fall in 2023. They've actually begun to decline at the end of 2022. Rent prices, the growth have just been unsustainable. And there's going to be almost 1 million more units hitting the rental market in 2023. So with that increased inventory, that will force prices to come down because people will be competing for tenants right at that point. Now, I told you they took shots at Gen Zers and millennials, young millennials. They're saying you all are going to rent indefinitely. Why? Because they know that you're going to listen to all of the crash bros. Millennials and Gen Zers have never really gone through an economic downturn. Let me rephrase that. Never really gone through an economic downturn as an adult. You've seen your parents suffer through the Great Recession, but as an adult, you've never experienced it. So when you hear house prices declining, or even seeing video after video about people predicting a housing crash, they know that you're going to be listening to these headlines, and that fear is going to cause you not to act, and you're going to be renting indefinitely. Now let's move on to prediction number 6. It says builders will focus on multifamily rentals, and that kind of correlates with number 5, saying rental prices will come down. Yes, I believe that this is the case. There will be more multifamily units, and that will cause rent prices to come down. So that is correct. Now let's move on to prediction number 7. It says investor activity will bottom out in the spring, then rebound. Now, I can see that happening. Typically in the springtime, that's when owner occupants go shopping. Now, investors don't mind competing, but during the springtime and early summer, investors are typically competing against owner occupants. And owner occupants tend to pay more or want to pay more for a home because they're not worried about the sheer numbers of it. Investors are only really concerned about the return on investment. They want to get the property for as little as possible. Owner occupied, if you're going to live in it, yes, you see it as an investment, but it's more of a long-term investment, and you're not worried about the cash flow every month like a real estate investor would. So yes, I see it bottoming out in spring and then rebounding toward late summer and the fall, because it typically rebounds in the fall and winter time because there's less competition on the market, and people like me get to put in lowball offers and not have to worry about much competition. Prediction number 8 is that Gen Zers will seek jobs in apartments in relatively affordable mid-tier cities. Now, I don't really have much data on this, so I am not qualified to really talk about this prediction. Now, I read some stuff about migration patterns and everything, but I'm first to tell you, if I'm qualified to talk about something, I don't know enough about this to say this prediction is right or wrong. So let's move on to prediction number 9. Prediction number 9 is migration from one part of the country to another will ease from the pandemic boom. Now, I'm not quite sure about that. I'm here in the Carolinas, and right now, I see tons of people still migrating to the Carolinas. And I'm getting calls, texts, and emails from people talking about moving in 2023. So yes, I believe it will ease some, but I don't think it will ease to an extent to where it will not cause home prices to either level off or even be elevated in certain parts of the country because of migration. Now let's talk about prediction number 10. Prediction number 10 is that rising disaster insurance costs will make extremely climate risky homes even more expensive. Now, if you live in Florida, you know exactly what this prediction means. Insurance costs for Floridians is through the roof. It actually makes me wonder why anybody wants to live in Florida due to the high home insurance cost. I believe there's only like 2 providers in the state, and they have a monopoly on home insurance, and home insurance is through the roof, making housing extremely expensive. Look, I get it. Florida is ideal. It has great weather, but is it worth the cost? Not when you can get 85 to 90% of the same weather in other parts of the country without having to deal with those extremely high insurance costs or potential weather catastrophes, these 100-year storms every other year. That's something for you to decide. But yes, rising disaster insurance costs will make extremely climate risky homes more expensive. They did not go out on a limb here because that has already been the case. Now let's talk about prediction number 11, where it says more cities will follow Minneapolis's example to curb housing expenses. Now, if you're not familiar, Minneapolis, Minnesota said they were going to eliminate the single family only zoning in order to keep housing costs low, and they were in fact the first city to see rents decline during the pandemic. Now, yes, you see other cities and areas of the country following suit, but I don't think it will be as widespread as this article may make it seem. I see this example being taken up in more liberal parts of the country, but in the South, I don't see that flying. I don't see that happening. You're not going to change zoning that easily. The people in the South, they're just not going to have it. Now we're moving on to the final prediction of Redfin for 2023. And it says buyer's agents commission will rise slightly. And again, they're not going out on a limb here. In the end of 2022, we've seen buyer agents commissions rise because there hasn't been many buyers, and the agents with buyers are incentivized to bring buyers to certain properties. Certain realtors may provide extra incentives if you have a buyer for their certain property, and builders are commonly doing this. If you have a buyer in their community, their new home community, they may have a realtor bonus for you. So yes, buyer's agent commissions will rise slightly. However, I believe their overall pay for agents will decrease significantly because there will be less transactions this year compared to 2021 and 2022 and even 2020. So after looking at this article, I don't believe Redfin's predictions are that far off base. Do I agree with all of them? No. Do I believe that some of their predictions need to be a little bit more precise? Most definitely. Going into 2023, I believe there are two major determining factors. One is mortgage interest rates. If mortgage interest rates continue to decline like they have been the past 3 weeks, and they're in the fives, I believe that home prices will be pretty level. I don't believe we're going to have that huge drop that many people and companies and organizations are expecting us to have. And another reason why I believe mortgage interest rates play a huge factor is because that will help determine if a homeowner is going to move or not. Once they run the numbers, they will see, does it make sense for me to sell this home with a 2, 3, or 4% interest rate to go buy a home? Now, if that other home they buy, if they can get an interest rates in the fives, then it may make sense. But if they have an interest rate in the sixes or sevens, they're probably going to do like a lot of my clients did this fall and decide that, you know what, it just doesn't make financial sense to sell this home right now and buy another home that may be a little bit bigger, but end up costing me $300, $400, $500 additional dollars a month. The other major deciding factor regarding housing in 2023 will be this recession. How long and how severe will this recession be? If it is what I believe going to be a very shallow recession, I think we're going to, again, be around level regarding home prices and home appreciation. Give or take 2 or 3%. Either way, 2% down, 2% up. I don't think we're going to have the 10, 15% growth like we had in the past 2.5 years. But if we have a very severe recession with severe unemployment and people not finding additional jobs, I believe that that will cause home prices to drop maybe 10%, maybe 15%. But I do not see a 20% crash in prices happening, even with a severe recession, because there still won't be enough inventory on the market. And even if there is a severe recession and people lose their jobs, we talked about it earlier. The foreclosure process is a lengthy one. So just because they may be behind on their payments in 2023, that doesn't mean that that house is going to be foreclosed on and hit the market in 2023. So therefore, you will still have that shortage of supply and lack of inventory. Be sure to check out some of my other videos where I talk about the housing market and personal finance. I'm Sir Ashley. Talk to you soon.